And it's 8:35 when you're driving to work this morning. As the sun's coming up, the rain has now kind of evaporated out of the way, so things are getting a little bit better. But let's check with our financial news desk this morning with Real Investment News head Scarlett Fakar. Good morning, Scarlett. How's the markets looking? I know they're opening up very nicely this morning.
Yeah, everything's looking pretty good, Lance. Right now, the Dow's up 58.
New highs! New highs!
New highs. There you go. NASDAQ is up 29, and the S&P 500 is up 7. Oil is down 22 cents to 51.29. Gold down 7.30 to 12.82. The dollar is stronger than the yen this morning at 113, and your 10-year Treasury rate is up 4 bips right now to 2.37. So great news, but we just want to turn to some of your top stories. I know we're going to talk about why some of these stocks are going to be a little bit higher today. Japanese conglomerate SoftBank plans to aggressively grow its $100 billion vision fund to roughly $880 billion. SoftBank has already used a massive fund to invest in NVIDIA, ARM, Improbable, and others. It's also close to acquiring roughly 20% of Uber. Its CEO said that the company plans to invest in at least 1,000 tech companies in areas like artificial intelligence and robotics over the next 10 years. MongoDB, a database provider, jumped on its first day of trading. Shares closed up more than 33% on the day of initial public offering. The company priced its IPO at $24 a share, which was higher than the expected range of $20 to $22. It closed the day at $32.07. According to CNBC, the company offered 8 million shares in its IPO and raised $192 million, valuing the company at $1.2 billion. General Electric shares plunged 8% after the company cut its 2017 profit forecast. The company reported that adjusted earnings this year are expected to be only $1.05 to $1.10 per share. That's down over 30% from a previous range of $1.60 to $1.70 a share. Lance.
Well, I'll tell you, GE's just had a huge amount of problems this year. And of course, the big issue with General Electric is just how safe is that dividend for people that are continuing to own the company for the dividend. That dividend is going to be coming very much into question with the drop in revenue. But interestingly enough, markets are up today. The big thing, the two big stories you brought up this morning really have a lot to do with the budget that was passed last night, clearing the way for hopes for tax reform and tax cuts. The dollar a lot stronger on expectations of stronger economic growth. The dollar's now broken out of its downtrend. That's headed back up. Now, that's really not good for the economy. Stronger dollars tend to hurt our exports because it makes our exports a lot more expensive. But the 10-year Treasury also backing up here, 2.37, as Scarlett said a few minutes ago. And that's also in the expectation of higher rates of inflation. So the question, as I was talking about with Chris a second ago, is that, has the market already priced in, much of what benefits you're going to get out of tax cuts and tax reforms? I mean, we keep nailing new highs every day.
Yeah, I don't know. I mean, honestly, if you can explain that to me, I'm kind of interested. So with the exports, with the dollar being higher, I mean, you would think automatically assume that would be a good thing.
Well, remember, so when things are priced overseas in dollars, which most things are, right? So if our dollar goes up, and that means that their currency is going lower, it requires them to spend more of their currency to buy our products.
Right,
and since we're a major exporting country, that makes our exports a lot more expensive. And in economies that globally that are already weak in terms of consumption, a rise in the dollar impacts those exports. Exports make up about 40% of our corporate profits.
Okay,
so, we used
crazy
to not be as big of an exporting country because the world was different. But now we export so much of our goods that a stronger dollar tends to weigh on profitability. So we want to watch that very closely.
Absolutely.